Joining us now, great pleasure, Treasury Secretary, Mr. Scott Bessent. Treasury Secretary, thank you very much. You know, I'm not going to get into the details of the construction site because I've never done that, but Mr. Trump knows a thing or two about all that. But you talked earlier, I don't know how many days ago, about at some point a thorough top-to-bottom review of Fed operations outside of monetary policy, which struck me as a very, very terrific idea. And I just wonder if you could share this. Is it going to talk about regulations, the Federal Reserve district banks, the amazing growth in the Fed staff, not just in Washington, but all around the country, millions of economists. Their finances are in a shambles. They're losing money every day. Their portfolio's underwater. Their interest expense exceeds interest received. They have the printing presses and they're losing money. If I had the printing press, I think I could make money. Anyway, might this review go through some of those items that I talked about?
Larry, good afternoon. I think they should go through all those items and more. And think about it. The Fed is the house. It's a casino. The casino doesn't lose money. The players are the ones that lose money. And I'm not going to comment. I'm like you. I don't really understand what's going on with the size, the scope, the cost of the building renovations. One can ask, was it a good idea to start the renovations for an enterprise that's losing $100 billion a year? So $100 billion because of a mismatch in the bond portfolio from the short-term rates. And I think that the Fed should undertake an internal review because I think all the other operations are endangering its independence of monetary policy. As I've said, monetary policy should be kept independent. It's a jewel box, should be walled off. But by undertaking all these other activities, then you come in for criticism, just like you're seeing here, that might impinge on monetary independence.
I mean, I've seen charts, Secretary, I've seen charts. The Federal Reserve expenses, including staffing levels, have gone up 300% in recent years. I've seen complaints. Mr. Powell has said, well, one of the problems here, or staff people have said, one of the problems here with the reconstruction of the Taj Mahal is that costs have gone up. Well, whose fault was that? You know, they had 20% inflation during the 4 Biden years. I mean, I know that's monetary policy, but the mistakes were made. I mean, it's like the Fed models don't work. They're growing like topsy. These district reserve banks, I don't think anybody pays enough attention to the power they have. They missed the Silicon Valley Bank bankruptcy because the examinations didn't work. You know, all these problems, I call it one big central planning squid. I mean, they've gotten too big for their britches, Mr. Secretary Bessent. That's my problem with the Fed. And, of course, I believe the models are always wrong.
Well, I think their footprint's probably gotten too big in the economy. And as you said, it is a new kind of central planning that we have the Fed board, the regional presidents who come in, and it's a group who they have undue influence in the economy. The Fed should be running in the background. The monetary policy should be a byproduct of the economy, of the inflation projections. And when we go back and look at both the growth projections and the inflation projections for the past 15 or 20 years, they've been notably off. But again, I just think that they ought to get back to basics, do what the mandate is. But Larry, I would also add, this is what happens when you have an unaccountable agency. And I'm not saying that they should be accountable for their decisions, but the Fed is self-funding. That many of us, myself included, have criticized the CFPB, the Consumer Finance Protection Bureau, because it also does not report to Congress. So many of the same senators and House members who love oversight of all the agencies, here at Treasury, we have very strict budget oversight. We were able to trim our budget this year. And, I can tell you, I got a new tablecloth for my office, and I brought it in from home.
Well, I hope it's a good one with some lace on the side. Look, I know the president has said he doesn't want to fire Powell. It's too much bother. He's going to be gone in a couple of months anyway. But as you know, Scott, it's actually the Congress, constitutionally, it's the Congress that has the play over monetary policy, the value of money thereof, quote unquote. And I just wonder, would you consider proposing some sort of monetary policy commission if you get a new chairman? You want to have a top to bottom house cleaning, a real cleansing of what the Fed has done and how many people are doing it. But how about an actual policy commission to examine the mistakes? And I mean, we've had successes in the last 40 or 50 years, but we've also had a heck of a lot of mistakes.
Larry, I'd like to see them give it a shot internally first. Yeah, as we saw after Bank of England had a big miss in inflation, just like the Fed did in 2022, and they put together a working group. They brought in a lot of outside experts to determine what went wrong, what could have been done better. So I'd like to give them the chance to cure this internally first. I'm afraid if we get the cacophony of Congress in on this, that it might create more problems than it's going to cure.
Well, okay, I get it. I hear you. You're the Treasury Secretary. You're doing a very good job. Color me highly skeptical that they can do it internally. But who knows? I mean, we'll give it a chance. Anyway, I know time is short. I want to switch to trade. I think you had a big win with Japan, also the Philippines and Indonesia, but a big win. We can actually sell them farm goods, rice, automobiles. I used to go to Tokyo when I was working on Wall Street. I never saw an American car driving in the streets. So maybe we'll be able to have American cars sold in Tokyo. But here's one thing that's so interesting to me and probably very important. All these deals you're putting together, you got quite a few now on the books, more coming, I presume. No retaliation has occurred from our so-called competitors or friends. Now, that is very interesting and very positive. No trade retaliation. What you make of that?
Well, Larry, I make three things, or I'd make 3 points. One, if President Trump has changed the narrative here, that his theory of the case, and he's absolutely right, is that the entire world wants to trade with the United States of America, that the U.S. consumer, the U.S. producers are the deepest and richest, most important market. So everyone is willing to pay a toll. Two, that these negotiations, as you said, the other countries have been willing to drop all their trade barriers. Indonesia came with a series of very good offers, and I looked at what they were giving up. I think we struck out 11,000 lines of tariffs from Indonesia. And as President Trump says, I don't blame the Indonesians. It was the past administrations that let him get away with it. And then three, we are seeing now President Trump has convinced the Senate, perhaps our allies, that secondary tariffs are a way to enforce foreign policy. So there's talk now of secondary tariffs on any country that buys Russian oil. So the Senate's willing to go along with that. Let's see if our European allies are also.
Yes, well, I think just though the generic point I was thinking about is you're getting these reforms, tariffs are coming down, you're getting more market access. I mean, really the policy is working despite the cynics and the free trade, pure free traders. But the pure free traders, especially in some, usually friendly conservative newspapers, not so friendly on this, always scream about retaliation, but we have not had the retaliation. And I think that makes it a new game. And I think that's part of the success that the president is having, you're having, and so forth, and the other negotiators. No retaliation. It's almost remarkable. Last one, I know let's see, this weekend or next week, you're going to deal with the Chinese, I believe Stockholm, Sweden, which is a lovely place. Chinese, tough nut to crack. What's the biggest problem? What's the biggest issue, Mr. Secretary?
Well, Larry, I think we're in a pretty good place with the Chinese, excuse me, on trade. The Chinese did have a brief bit of retaliation right after April 2nd. We got into a tit for tat. We were at 145% tariffs. They were at 125, which is really an embargo. We had a meeting in Geneva. We brought those down. The U.S. is now, we have a 30% tariff on them, 20% tariffs left on from President Trump's first term, but 30% new tariffs. They have a 10% tariff on us. So trade is in a good place. And I think we're going to be able to move on to the bigger issue of China needing to rebalance. It is the most imbalanced, unbalanced economy in the history of the world. They now account for 30% of global manufacturing. That's unsustainable. They have a real estate downturn. Many would call it a crisis. Manufacturing has slumped, and they can't export their economic problems to the rest of the world. They need to solve them. One of the ways to solve them is to create a consumer economy. So we'll be talking about that. We'll be talking about the fact that they do buy sanctioned Iranian oil, Russian oil. You know, if they would pause those purchases for 3 or 6 months, I think that the Russian war machine would grind to a halt. Iran negotiations would be much easier.
Yes.
So we've got a whole range of things to talk about.
That's a really key point. That last one is so darn important. Anyway, I won't keep you. I appreciate your time very much, Treasury Secretary Scott Bessent. Good luck with the Chinese. Appreciate coming on the show.
Good, Larry. Good to see you.
Yeah, it's good to see you.